should be expecting from the market today with Stan Shamu from IG in Melbourne. Stan, thanks so much for your time. Can I start with the iron ore price, because that's front and centre now, $158 a dry tonne. No one thought it would get to these kind of levels this quickly, that's for sure. How do you think that'll set us up for the market today? Because certainly yesterday we didn't see that space perform on the back of a price rise.
Yeah, absolutely. It does seem that way. Of course, I think the first thing that caught my eye this morning was the fact that BHP is actually matching lower. Currently, the ADRs were pointing to a 10 cent drop to, I think, around 37.40 at the open. So it does seem like BHP will open a touch lower. In fact, if anything, we might see it open a relatively flat, and that's pretty disappointing considering the big jump we've seen just this week in iron ore prices. At the same time, Fortescue's under the spotlight after Deutsche Bank downgraded them to a sell from a hold with a $3.75 price target. So I mean, considering they're trading in right near $5, it's quite a big downgrade for all intents and purposes. So I think we'll continue to see everyone scrutinize this iron ore space for a while now, and it does seem like it will probably start getting some buying in the medium term, but in the near term, I think most investors are feeling a bit spooked, and they just don't believe in this iron ore rally, so it seems, just from the price action that is. But we are expecting some pockets of strength elsewhere. We saw obviously the retailers yesterday have a pretty good run ahead of that retail sales number that's due out today. The particular gainers were, we had Harvey Norman, JB Hi-Fi and David Jones. They all did pretty well. So we could expect to see them start off quite well today, leading into the reading. Of course, following the recent rate cuts and some of the sales figures we saw over the festive trading period, I think expectations are quite high that we could see this sector start to see some revival of some sort after having been beaten down quite significantly over the past couple of years or so. At the same time, I mean, obviously some still feel it's structural problems within some of these retailers, but we do need to see that sort of pickup in the economy as well to try and sort of limit the downside risk that these stocks have endured over the past few years now. So yeah, that might be one of the main issues to look out for. Qantas has been one of the better runners in the market so far. I mean, obviously no one's really noticed it, but that Emirates tie-up seems to have really given its stocks a bit of a kick. We also have, of course, Alcoa's results. We can't overlook those. They'll have a bit of a bearing on Alumina shares today. We saw Alumina actually rally quite significantly yesterday, popping through $1 momentarily, but pulling back into that 98-cent region towards the close. So that will be one of the more interesting stocks to watch today as soon as we get those Alcoa results starting to hit the wires.
Yeah, waiting for those, should come out any second now. I just want to go back to iron ore at the risk of talking about it too much. I just want to ask you about the reasons behind the rally we're seeing at the moment. We spoke earlier to Juliana Rodley from Comsec, and she says you've got to be careful looking at these Chinese spot figures, especially at this time of year when liquidity is so low. It's like any other market. You've got to watch big moves made in this space. What do you make of them? You speak about investors not believing in this rally in iron ore. What are the reasons behind it?
Yeah, I suppose the physical buying underpinning the price action will always be an issue. And of course, I do agree with the volume issues related to this trading period at the moment. So it probably does seem like it's seasonal factors, and that's probably one of the main reasons why investors don't believe it. I think we've heard quite a few broker reports coming out and saying it's a bit overrun, and they expect that sort of restocking to finish quite soon. So that might be the key issue going ahead. Of course, it's really hard to tell until we get more definitive action from China itself. But at the moment, it's all a lot of speculation, and it's really hard to look at the figure and just not look at it with a bit of a grain of salt, I suppose. So yeah, no, I completely agree on that one.
Okay, interesting. Let's take a look at currency markets. Pretty choppy overnight, but the Aussie dollar's holding steady just below 105. What's your outlook there?
Yeah, absolutely. The risk currency space is very choppy at the moment. The Aussie dollar has been stuck in a bit of a range all week between, I think, about 1.047 and 1.052. currently holding slightly steady at about 1.04, 1.05. So it does seem like with a few data prints that were due out this week, there was quite a bit of optimism around it. Yesterday we saw it rally into the trade balance numbers, and of course with that deficit coming in much wider than expected, and basically at the worst level in 4.5 years, we saw the Aussie dollar slip a little bit, but still, all things considered, it actually held up fairly well and managed to hold that range through US and European trade. So it probably seems there's a little bit of optimism as well surrounding this retail sales number. Of course, we're expecting a 0.3% rise in retail sales, but should this figure exceed expectations, then we could see the top end of that range tested, which is around 1.052, and potentially we could finally break through that. On the contrary, of course, if the data disappoints in a highly optimistic environment, then we could easily see that bottom end of that range broken and possibly see the Aussie dollar struggle through Asian trade.
Okay, Stan Shamu, thanks for the update.
Cheers, Kate.
Just taking the viewers across that breaking news on the screen.